Hello traders, Cousin Vinny coming to you from theclosingprint.com, December 26th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices setting up a potential rally into year end. With most leaders also following through, we have the majority of our indicators bullish, only 3 are neutral and 1 is bearish, the rest are bullish going into year end. We have a lot of stocks that are set up this week. Sectors are mostly bullish, all of them bouncing with healthcare, staples, and utilities leading higher. Gold also had a nice turn. We did add some gold late on Thursday and look to add again this week. S&P 500 is in a state of positive gamma with 4550 support. Resistance overhead at 47.50. The call wall did shift higher, and we're trading in positive gamma territory. S&P 500 is still in a range. We did manage to move back up to all-time highs, having a 4.5% pullback to the Monday low before buyers stepped up. While relative strength improved, breaking a downtrend, MACD and stochastics rose, but volume did taper off. So we're looking for a follow-through on higher volume this week as we look for breadth to improve. The S&P Equal Weight Index did push higher. This suggests that we could see a follow-through and the S&P breakout, move towards that 4750 gamma level, as this has room to run before it reaches all-time highs. Breadth is improving with the number of stocks trading above their 50-day moving average at 61.92%. So there's plenty of room to the upside before we get exhausted and look for any kind of pullback. We're also moving to all-time highs just as breadth begins to improve, so there's energy to push stocks higher. The advanced decline did move higher as well last week, and that is echoed by the number of breadth indicators moving higher. The S&P 500 in the upper panel, mid caps and small caps in the lower panel, with NASDAQ at the bottom. All of these pushing off of oversold levels with indications that we could see improvement this week, together with the NASDAQ Composite McClellan Oscillator, which formed a trough last week, looking for a follow-through and a push higher, echoed with the improvement in the New York Stock Exchange McClellan Oscillator, which also bottomed last week, giving us room to run to the upside, with additional measurements on the New York Stock Exchange Composite coming off of oversold levels with the McClellan Volume Oscillator. That's also giving us indications that we could see persistence in this bullish reversal and thrust on Monday. In addition, we also saw growth and value improving last week. Both technology, semiconductors, hardware, software, networking performed quite well, along with the banks, materials, financials, industrials, and energy stocks. As we can see, both of these rallied above their 21-day moving average, pushing up towards all-time highs. Assisting the broad market, we also saw risk-on indicators suggesting more upside potential, with the Russell 2000 small caps, a very risk-averse group of stocks, rally, which is telling us that investors are taking on additional risk as the S&P 500 trades at all-time highs. That's a bullish signal going into this week. We also saw the put-call ratio spike to highs over the last couple of weeks, with a crescendo on Monday when we had that reversal, which indicates that was a valid bottom. Obviously, we rallied into the Thursday close, where peaks in the past, going back 5 years, gave us indications that a bottom was in and that we could see follow-through, on top of the fact that we saw institutions rolling their call wall higher from 4,700 to 4,750 to end the week, which left us with only one bearish indicator going into the last week of 2021. That would be the VIX VXV. As VIX drops the VIX versus 3 months further out, we know the term structure is a bit more bearish going out in time. So with VIX VXV at these lows, we need to be cautious as we trade near all-time highs. And just remember that most of our indicators are suggesting the current move has some legs as we look for breadth to improve. The bond stock ratio has fallen all of 2021 and from March into year end on 2020. This is a bullish indicator. We're thinking about taking some of our bond exposure off from about 42% down to about 40%, and then adjusting our exposure to equities a bit higher if breadth continues to improve. As most bond durations, the 5, 7, 10-year, and 20-year all show a range-bound condition presently above the 50-day moving average. So depending on what happens on Monday, Tuesday, we may back off on our bond exposure in the short term and increase our exposure to equities. The reasoning behind adding to our equity exposure relates to all of our indicators, which are mostly bullish. Junk bonds are pushing to new highs. That's a bullish indication, as well as IBB, IWM, USO, Bitcoin, and the advanced decline. All of our indicators are bullish this week except for one. Again, that was VIX VXV. Additional concerns for safety started to back off a bit. We're in a range-bound condition for the last 4 weeks in the US dollar. If we start to see the US dollar pulling back a bit and moving lower, with the potential for the US dollar to fade a bit more, that would fuel the current move that we're seeing in gold back above the 50-day. Late on Thursday, I did add a bit more exposure to my gold positions. So we're looking for this to continue and push higher. This week, move back to resistance just overhead, where we saw price action reverse in July, August, and again in September near 1830. Copper is also in a neutral signal, slightly bullish as it moves higher. It's been in a range for the past 8 months at the same time that Brent crude has been moving higher. This is a bullish correlation to equities, so if we see crude moving a bit higher, watch for equities to follow through as well. Sectors over the last few weeks recorded on Fridays have started to improve from red to yellows and oranges to mostly yellows and greens. Last week, we also saw the international indices improving, with most of the international ETFs closing higher, with the ACWI, the All World Index MSCI ETF. This is the top performing stocks from each country, sans US. That had a nice bounce on Monday as well, with the cycle clearly bullish, with all of the major spider sectors also moving higher last week. We look for outperformance in healthcare providers to follow through, while consumer discretionary did manage a bullish follow through as well. From the Monday reversal, we had 3 white soldiers, price action pushing higher into Thursday's close as retail moved higher, and we saw the XLY-XLP ratio give us a bullish signal to end the week. With most of the IBD 50 bullish, we're looking for stocks that are closer to the 21-day, like AMD, for a follow-through and a push higher into year-end as potential setups versus stocks that are clearly bullish but too extended, like Broadcom, AVGO. Also watching for strength in stocks like InMode, which are reversing off of recent lows, looking for a push back above the 21-day. We got that on Thursday. As the stock over the last 5 trading days moves off of that 200-day moving average with RSI rising, we're looking for InMode to get back above these volume by price bands and to head towards 50-day. Continue higher to all-time highs probably in the first quarter. We should see a retest, if not sooner. Additional semiconductors like LRCX, while they're bullish, it's a little bit messy over the last few weeks. So I just steer clear of stocks like that until they start to trend. Like Kinsale Capital, which is trending. Financials were pretty strong last week, looking for a follow-through. With RSI above 50 and rising. Volume showing institutions have been picking up shares. MACD has crossed, and we're looking for stochastic to stay embedded. With the strength in technology, we're also looking for stocks like Seagate Technologies to continue this trend higher. It's been in a range, again, a little sloppy here. Looking for a breakout though. That continues as RSI is rising, volume increasing, showing institutions have picked up shares. MACD has crossed. Also looking for Silvergate Capital to continue higher. With Silvergate pushing off the 200-day moving average, once it gets above this volume by price band resistance, we should see a push through the 50-day over the next couple of weeks. As RSI suggests, the strength in the trend is becoming more persistent. Looking for MACD to cross. Sight time also looking very strong, looking for a follow through. It's pushing above the 21-day. For the last 5 trading days, this looks very strong. RSI is rising. Volume starting to taper off a little bit going into Thursday's close, but stochastics and MACD are both set up, looking for a follow through. We're also watching for Tesla to follow through this week. Nice push higher on Thursday above the 50-day moving average. As volume increases, MACD is just now crossing and stochastic is rising going into Monday trading. Trade desk also looking very nice. It's pushing above the 21-day. Looking for a follow through this week. RSI is rising. Volume starting to pick up. Stochastics and MACD set up perfectly. Looking for a continuation and a retest of these recent highs. Along with Trex, which also pushed higher above its 21-day. RSI is rising. MACD is about to cross and stochastics is rising. While we also look for strength in pharmaceuticals and healthcare providers to persist this week. XLV, the healthcare sector, was pretty strong. We can see West Pharmaceuticals, which populates the IBD 50 quite often, looking for a continuation out of this cup pattern, potentially a handle up here near 52-week highs. RSI is rising. Volume showing institutions have been picking up shares, and MACD is above its signal line with stochastics rising. Lots of stocks from the CanSlim list that was updated this weekend. Looking for a follow through in stocks like Google, Apple as well. Archer Daniels Midland looking very strong coming off the 21-day moving average. Bristol Myers Squibb, while it's not shown, it's right at the 200-day moving average. We're looking for a breakout after this week-long consolidation. Pharmaceuticals have been looking very bullish lately. We're also watching for broadcast and communication stocks like Comcast to continue higher. It's pushing above its 21-day. Domino's Pizza breaking out of a 4-week range, looking for a follow through this week. Global Payments pushing back above its 50-day. We got FedEx also breaking out. That looks good going into this week. JP Morgan Financials looking for it to get back above the 21-day. IDEX Labs, Veterinary Sciences, this one's pushing a bit higher, looking for a follow through. We're also watching the Travel and Leisure Group, airlines, and hotels, among other groups like cruise lines, looking for a follow through this week, or maybe a little bit of consolidation. Those all look pretty strong. In addition to FedEx, UPS looking very strong going into this week. With all of these stocks from the opening monologue set up and ready to follow through, make sure you check out these names individually. They look very strong. With a nice finish on Thursday, we're looking for a follow through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com this Christmas holiday weekend. So make sure you check out the watch list, which I'll send out tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast. Take care and enjoy the rest of your Christmas holiday weekend. We'll see you in the morning. Ciao.